All right, guys, we are back and we are on QQQ. I did already post the video for SPY and SPX, so if you missed that, go back to my main page, and I did just post that right before this. And we did see another big gap down. This is the second one in 2 weeks. We did see the first one right here, and this was last week on Wednesday. We gapped down, and that was after we made all-time highs after we got the hot PPI data. So hot PPI data, we gapped up, made new all-time highs, and then we saw a pretty decent tech sell-off here. And then when we came back up to the 35 EMA, had a lot of trouble keeping that level. Then we started seeing it as resistance. Then we saw that gap down. And we did see our first true bearish signal right here within that gap down. So let's even go ahead and put an X right there. And from there, we dropped down. So with such a huge drop, and if you recall, this was the entire implied move that day, we actually never touched the implied move, just gapped completely out. So now we know that when we completely gap out and even one or two candles lower than the gap, and we're just gonna sell off really hard. We saw that last week, and then this week we gapped up, had a little bit trouble around that 35 EMA again, and today we gapped down completely underneath the implied move. And we gapped down underneath the last support level right here. We did see this on Friday, and before that we did see it as a support right here. This was in the end of June, and once we gapped down, we got underneath the 50-day moving average, and it was an absolute bloodbath today. Straight down, filled this gap. This is the gap from CPI, PPI, and FOMC in June. So that was closed out today, and we saw an absolutely huge 3.59% drop. VXN popped 15.18%, and we did not even touch the implied move. So things are definitely getting pretty shaky out there. The 50-day moving average did not offer any support, which is a bit troubling. And we have that same question here. How low are we going to take this? We did stop right here, which you can see was a little bit of support. I wouldn't count on this because that was before that CPI, PPI, the buildup before that. So we're just kind of dangling, and we have the 4-hour 200 moving average underneath us. We do have the island bottom. So this is where we gapped down and then gapped up. We have this island bottom that was in June. And I'm going to switch it over to the 1 year. This is the 1-day candle. And let's do the same thing here where we overlay the Fibonacci retracement. And if we look at it from here, we did break the 0.382 level today. And just underneath that is the 0.5, which is at 458.37. So if you look at that level, we did see right here resistance. The 0.618 level at 447.75 would be, I would say, max pain on this drop before we really see a bounce back up if we are not done dropping. And you could see at that level at 447, we did see support right here. And before that, it was actually a resistance for, let me measure that out right here. So resistance for about 41 days right here. So back in March, we saw a little sideways trading there. So 447 is definitely a real target. If we break 0.618, that's when you say, uh-oh. But anywhere between 0.5 and 0.618 is a very healthy pullback and nothing to necessarily freak out about. Unless, of course, you're day trading 0 DTE options. But in the long term, that is a pullback that would be very healthy to see, especially after this low volume rally that we've seen in the second quarter. So that is QQQ. On the 1-day time frame, we do have an oversold right here, but the red signal line is these two levels are very wide. And with the current momentum that we have and how wide this is, we really could see lower. It's not like right back here where that red signal line and then the green line's kind of hugging around it. This is just a wide open indicator here. So that is QQQ, and let me go see really quickly if there's anything else that I see. I did also notice I switched over to the 1 hour time frame here, and we did see right here that's a 30-minute cross down. We are bearish on the 1 hour time frame. On the 2 hour time frame, which also lines up with the 50-day moving average, we did drop underneath that level. The 35 EMA has not crossed underneath that yet, but we are on the 4 hour time frame. So having this 4 hour 200 moving average on your chart is absolutely necessary. And let me just go look on the 4 hour chart, and there it is right there, right within the island bottom reversal right here. So a lot of things to look for. This is not like when we are flying high above every single moving average. Things get complicated when we start dropping lower. But we also get lots of volatility and lots of amazing opportunities. So knowing where these levels are is super important. All right, I have rambled long enough. Let's go check out tomorrow's levels. Alright guys, so before we head into tomorrow's trading ranges, if you find these videos useful, if they help you to choose better strikes and take better trades, and you love that I break it down every night, then please make sure to give this video a like. Don't forget to subscribe and turn on notifications so you don't miss out when I do post new videos. Leave me a comment if you have any questions at all. I try and get back to all comments within 24 hours. And also, there is a thank you button underneath the video, and if you think I earned it, I would love it if you bought me a coffee. Alright, so tomorrow's implied move is between 456 and 469, and that is from options. The 30-day average volatility is a little bit wider, 455 to 471. And on Friday's contract, the implied move is between 454 and 471. And to the upside, we do have the 35 EMA. I always say know where your 35 EMA is because we tend to return to it often. And especially if we have a slow start to the day, then we'll start moving towards that level, and that is to the upside. We do have GDP and initial jobless claims in pre-market, so that will likely set the tone. But it's always good to know where the 35 EMA is. So that is above our trading range tomorrow. So as we start trading, it'll come into range here, and it may be resistance. We have seen that 35 EMA as resistance pretty much since we lost it up here. You could see we had a difficult time getting over that level here, and then when we gapped down, whenever we came near it, and even up here, we just had a really difficult time. And of course that 1 hour 200 moving average was there as well. But first level to look for, 35 EMA. Top of the implied move is at 469. And let me just zoom in just a little bit more here. 469, and then on Friday it is 471. We have this green line above the trading range. That is previous support we saw right here, and that goes back to right here. We did gap completely underneath that, so it is very possible that that acts as resistance if we come up to that level, and especially since we have the 50-day moving average, which offered no support today, and then also that island top, which is the up gap and the down gap. So the top of the trading range is no joke, a ton of resistance, and to the bottom side we do have 456 is the bottom of the implied move, and then underneath that we have the 4 hour 200 moving average. And just like to the upside we have an island top, we actually have an island bottom gap to the downside, and that goes back to right here. This is in May. We did actually gap down right here. We gapped down twice here, and then we dropped, and when we came back up we gapped over that first gap and then filled in that second gap. So we do have an island bottom right here, and that is just above the 4 hour 200 moving average. We are kind of dangling in the middle of thin air here. We don't have a huge support. There was a little bit of something right here, but again, this was more of like the build up going into CPI, PPI, FOMC in June. So I wouldn't lean into that as a support. So because we are dangling here, we might need to, if we don't drop and find support here, if we stay around the middle level, then we might have to build a support. So maybe a little bit of flatness to start to see where we go from there. And tomorrow's trading range is interesting. We have the 50-day moving average to the upside, 4-hour 200 moving average to the downside, and we have an island top and an island bottom. So really interesting trading range. I'm super excited to see how it plays out. And really the only level that's actually physically in our trading range is only the 35 EMA. Everything else is a little bit outside of it. So let's see what happens tomorrow. Have fun, trade safe, make sure you take profits when you're up, and I will see you guys tomorrow.